Good evening, everybody. This is Chrissy from Solstice ATR and Vulcan Capital Research. I hope everybody's doing great on Saturday evening, July 18th. Let's first get started by taking an overall look on Fortune 500, NASDAQ, Russell, and the Dow Jones Industrial Average. You can find us on Solstice ATR, powered by Vulcan. My handle on Twitter is Chrissy Farah, or my handle on Discord at Zuzu number 9345. The stuff that I have here for you is for illustration use. We are not a broker-dealer. Past performance does not indicate future results. Let's take a look at how they look like compared. We are partially filling the gap on those instruments. You can see that we are coming into that gap. We have not filled 100% of it, but we are, looks like that the Russell, the Dow Jones Industrial, S&P, as well as the NASDAQ, they're doing some catch up compared to the NASDAQ 100. Let's take a look at the different instruments. And what I want to do is take a look at the NASDAQ breadth before I start going into technicality of each instruments that we have. It's a dollar sign, dollar sign, NY FANG, that's the NASDAQ FANG. And if you can look at it on FANGs, these are the NASDAQ 100 top, 8, 10 holdings in it, such as, Tesla, Amazon, Google's of the world, Facebook, Apple's of the world. But Apple is no longer considered part of them, but they're part of the Dow 100. But as you can see on the weekly chart, it's nicely going higher. If you take a look at now the S&P 500 SPX, it has done major, recovery, and it cleared last week's candle, and we are in a continuation. We had a look below and came back up. What I want to do is go to the daily chart. Just go to daily, and I want to show you something here. On the daily chart, what happened here? We're going to move that out and zoom in. And as you can see, I mean, the prior week, we were trying to look up this is the candle that we looked up on the daily basis, and this was the prior high. We cleared, the 3184 area. We looked up on Monday. We had a professional gap up. We came back on Tuesday, Wednesday, Thursday, and this is Friday coming back in. If we're going to continue higher, we got to stay above the 3178, 3175 area. If we end up losing it, we can come back down. And this is the channel. We are in an up channel. We are holding the 50 simple moving average very nicely. We have caught up with the 200 simple moving average at the same time with the 116, and the 18 is right underneath, right in between the two linear regression channels that we had done on a daily chart. So I want everyone to understand the S&P 500 has caught up to the prior high, and we have not cleared the 3223 from a couple of weeks in June 8th. We have not cleared that, but we are doing some catch up. So let's compare it to a couple of other instruments. I want to look at the leveraged loans and the banking sectors, and we can look at the BKLN compared to the S&P 500. And as you can see, this was, the March, February drop. We have recovered, all the way back up, came back down, and the loans seems to be stabilizing. This is the leverage. Let's take a look at the consumers industry, such as the car industry. They're coming back online. It's KARZ. And you can see here on the daily chart, it did that H pattern, fell down. We have recovered, and we are in an up channel. It's way away from the 50 simple moving average, but it is, a little bit, on the 18 simple moving average. As long as we stay above the 33 in the, in the industrial car automobile indexes, it seems to be doing well. Corporate compared to the corporate bonds compared to the government bonds and the TLT and the IEF. I'm going to put the LQD, because remember, they are vice versa compared to this is the iShare Trust corporate bonds, and you can see that they have recovered quite a bit because the Federal Reserve Board, the European zone, the UK, Japan, Australia, everybody in Britain as well as the Eurozone is buying, corporate bonds. So let's take a look at the SCHB, and the reason behind this, I'm using this. This is the 2,404 companies that are tracking not just the S&P 500. They have more other companies inside them than the 500 S&P 500. If you notice, it has recovered quite a bit, and this is 2,404 different companies inside that market electronically traded fund. So let's compare that one to the TLT growth compared to the SC. I'm using different ETFs so you guys can look at it in a little different way as an overall. This is a compare growth fund compared to the TLT. And what I want to show you is, if you notice, this is a strategic trust large cap growth fund ETF, and it has done 100% of the February drop, recovered 100% of it, and it's holding, different instruments in it. Let's take a look at the TLT, which is the ETF fund for the, oops, I put the wrong one, TLT. And that's the short-term the iShare 20-year Treasury bond. We came down, we spiked up in March, February, came back down, and we are basically stabilizing. That's the TLT. And I want to do one more. It's the IEF. If you don't watch the TL, this is a shorter-term, 7 to 10-year, bond. And if you noticed, from February, we spiked up and we stabilized here. Let's take a look at the stocks compared to the bond market, which is this one right here. I'm going to show you the stocks, SCHX, the overall stocks in the market. And if you notice, this is similar. This is the large cap ETF, the Schwab. If you notice the prior, in February, March, we have recovered almost the H pattern. We are almost trying on a breakout. Let's take a look at the semiconductor industry, because this has a lot of instrument, technology, computers, car manufacturing. Semiconductors are used in phones, and they're all home appliances, equipment, TVs, and all that. Let's take a look at semiconductor, and as you can see, the semiconductor has recovered the February, and it's actually broken out. Last but not least, I'm going to do two more consumer discretionaries, and that's the XLY. And the XLY, you can see similar situation, recovered 100% compared to the SPY Fortune 500 ETF, which is the Spiders S&P 500 electronically traded fund. Similar situation. Last but not least, I want to look at the retail, because people do spend money even when you're home. You're not doing much. Kids are gonna, whether we go back to school at this point or not, they have to buy computers, books, and stuff. People are gonna spend stuff. And if you notice, since the December, January, February reset, we have almost recovered 100% in consumers' products. So the most important thing I want to tell everyone here is this: trade what you see on the charts. Don't trade what you think. Don't assume. Listen to the news. Listen to what the chart is telling you. It keeps you out of harm's way. Let's take a look at the VIX VXO, and I want to go on the weekly on that one. Sorry, VXO, and I want to show how far we have recovered on the daily chart. You notice that was the spike here on the daily chart when went from February 6, 12, 27, 24 all the way to the 24th of March. We have recovered. We are underneath the 33 area. We spiked up a little bit a couple of days ago. We fell back down on the VXO. So let's take a look at the /VX, similar situation. I'm using a couple of them, that way you guys can keep an eye on them, whatever you want to watch. That's the VX at the same time. Similar, this is the one I watch because this is the future contract. We had 100% almost. We have recovered and we are still underneath that $30.40. As long as I'm below the 30.42 and 31.40, my fear gauge is not, opening the door to say, hey, be careful. Consumers are little fear from the COVID-19 and the increase of hospitalization in Texas, California, Arizona, as well as Florida. So keep an eye on what the outcome is. Are we going to go back to full reopening or partial reopening? And is the oil consumption, because people are starting to get around, about a month ago, oil consumption was almost to a zero halt. Now it's back to about 62, 63%. People are using, gas and stuff, and I'll show you the numbers out there. So let's take a look at the ES Fortune 500 company. And if you notice, that's the E-mini contract. It shows that it has recovered, and it's trying to get to the 32, 31. If I take the overnight off, it's a little bit different. And if you notice, that was the high on Wednesday. We had 32, 33 quarters. So we took over that by a little bit. So we have to keep an eye on that symmetrical triangle. We are in an up channel. The 50 is here and the 18 is here. So we have the 31, 35 to keep an eye on, as well as the 3060. But the most important thing is keeping an eye on the 3070 area, 75, and the 78 where we broke out of from a week ago in the consolidation. What I'm going to do is zoom in here so I can show you how they look like. We can consider them two boxes. This was the week before where we had the consolidation. Then we eventually broke out of this area, 3184. So on Monday, we gapped up. We came back in on Tuesday. We fell down all the way to that bottom of this channel. We bounced back. And this is the Wednesday, Thursday, Friday. We have this overall consolidation in this area. In order for us to continue higher, we have to break out of this area, the 32, 33 area, 35 to look up to the upper channel. And if we fall below that 3190 area, we look for the backside of these consolidation for the last week or so to come back down to this channel. This is where the POC is at 3137, and that's the 18th simple moving average. Remember, we're going to trade what we see, not what we think. This is very important, and I will go over the volume profile in the S&P later on. Let's take a look at the NDX, NDX. That's the NASDAQ 100. As you can see, it's consolidating from the prior week. I just zoom in here to show you how it looks like. We looked up. We had a failure on Monday. Tuesday tried to recover. Wednesday, Thursday, Friday. We're still in the lower distribution because I think, there's a little shift between the large cap, the small cap. Let's take a look at the Dow Joe Industrial Average. And as you can see, the Dow Joe Industrial Average is inside that symmetrical triangle, trying to recover. Hasn't broken out of there, so we're going to keep an eye on that one as well. Let's take a look at the small cap, the RTY. As you can see, the RTY is doing some catch up. It broke out of that first channel trying to consolidate. If it breaks out of the 1500, I will look for the 55. If it falls below the 1445, look for the backside of the channel and the 50 simple moving average. That's in small cap. Let's take a look at Apple. This is Apple. As you can see, Apple, looked up and came back in. We had the extension. Look where exactly it went to. I had this prior Fibonacci. I never changed it. I left it there, and I knew that these extensions will be revisited. Look how close we got to it, and exactly to the 61.8. Let's take a look at the Amazon. Amazon looked up and coming back in a little bit from that extension. Let's take a look at the BIDU. BIDU came back a little bit. Let's take a look at BABA. Similar situation. Let's take a look at Facebook. Facebook, looking up, it's in side action for the last 2 weeks, 3 weeks in that consolidation. Let's take a look at Google. Google, similar situation in that in the upper distribution. Let's take a look at NFLX. NFLX reported, unfortunately, because this following 2 quarters, they're expecting that the advertisement and things are not going to be looking that well. We looked above the linear regression channel. When eventually on the earning report we fell back down, we consolidated in here and we fell back in. And on this is the earning report, we fell back in and came back up. If you noticed, we are in that upper distribution of the breakout. I mean, it's holding barely the 18 SMA. Where would I like to, if I'm gonna try to catch Netflix, either on the backside of this channel in the 50, or the 50 Fibonacci would be a better area for Netflix to catch on. Let's take a look at Tesla. Tesla's going to be reporting in the coming weeks as well. TSLA. And you can see Tesla, it looked up, and I had it on the daily chart. We were trying to trade it because we had some people trading it in the room. We called a couple of trades in it, and this is why we have that symmetrical triangle there in Tesla. Let's take a look at Goldman Sachs. That's Goldman Sachs. It looked up and came back in on a cup and handle. Let's take a look at BLK, BlackRock, the brokerage world. It's doing very well and broke out. Let's take a look at American Airlines. I had it last couple of weeks. It came back in. Let's take a look at Boeing. Similar situation. Let's take a look at Shopify, SHOP. And that Shopify came back a little bit. And let's look at PayPal, PYPL. Similar situation, came back up on Friday, rounded bottom. Let's take a look at Visa. Similar situation, consolidation in that flag long term. Let's take a look at ALXN, ALXN. I'm just going to go over a couple of biotechs. VRTX. So you can see what's going on. IBB. You can see it up there as well. This is an iShare. That's the iShare of the NASDAQ biotech overall. If I look at BIIB, it's totally different. BIIB. It's side action. You can see it. And that's why I wanted to go a little bit over. Let's take a look at Costco, COST. A new high. Let's take a look at WMT. Almost a new high. TGT. Because consumers are spending money, and it's in the side action, consolidation for the last couple of weeks. And let's go back to the ES and break down what I can see in it in the volume profile. I want to go to a 20-day or a 10-day, 30-minute. I'm going to do 20-day, 78-minute, and I have the volume profile right here. And I'm going to zoom in from this breakout. We had this move up, consolidated, then consolidated after the breakout. Consolidated for 5 days. We looked up and came back. We are inside the consolidation. Let's just go from here. 10-day action. What I want to show you is here that the volume profile has a value area high, has a value area low, and the POC in it. We had the last week consolidation here. On Friday we closed. Then on Monday we looked up. Tuesday we came back down. Wednesday we had a up move, gap up. Then on Thursday we came back in, and Friday we had an inside range in the last 3 days. We can consider these 3-4 days from the Monday look up. These are all upper distribution consolidation, other than the Tuesday drop down, then the Wednesday pick itself back up. So this is the Tuesday drop. We continued from Monday, then we fell back down to the 31.19. We never actually touched the 31.90, 31.05. This is very important. We went and looked at the 31.19 whenever it came back to this area, the 31.05, where we had a week before. If I'm going to see this going to be retraced and we're going to lose the 31.90 here, and this has a green box, which is an ADX DMI crossing going in that consolidation the last 3 days, you can see we are in compression going inside action range bound. Either we break up or we break down. If we clear the 32, 33 area, look to go higher. If we fall below the 31.95, 96 and 90, look going back to the backside of the down channel. We will eventually lose the 116 and the 200 SMA. So I'm going to show you the linear regression channel right here. We have that symmetrical triangle from down here. If we break up, I would look for the upside of the upper channel, linear regression channel, if we broke out of this symmetrical triangle. And if we fall through this smaller symmetrical triangle, you can draw a channel. And if I fall for it, I would look for the back side of the other end. So I hope this was helpful. Before I finish up, I want to go over a couple of things on my charts. I put something up for you guys up here, and I want to start with it here. This is the overall trend. Trend is your friend. Look at the global expectation. Look at the energy sector, momentum, asset allocation, and class behavior. Look at inflation and the expectation and the sentiment. This is something that was written by someone else. Technical analysis track the past. It does not predict the future. You have to use your own intelligence to draw conclusion about what the past activity of some traders may say about the future activities of other traders in the coming month. Remember, these are for illustration use. I have used this one before. I have told you this. Charts are reflection of human behavior. Remember, it's psychological. Humans act in similar ways during periods of high stress and high fear. Humans act in a similar way when they are fearful and being left behind. Humans act in a similar way during bottoming process. Humans act in similar way at the early stages of new bull market. So remember, trade what you see, not what you think. This will help you keep you in line. What happened here? Okay. Money maker, the merry-go. This is from Wall Street in 1970. I have picked this one up for you guys to read. In the stock market, think of it, it's like horse racing. Money moves around, correct? Monetary conditions, such as the Federal Reserve Board, exert enormous influence on the stock price because they pump money into it and they take money out of it. It drags it down, drags it higher. Inflation comes in, interest rates go higher, people go to the defensive stuff. Indeed, the monetary climate, primarily the trend in the interest rates and Federal Reserve policies, in the dominant factor of determining the stock market major direction. And this was written by Marty Zweig. Let's go to the next one. This is the quantitative easing, and I wanted to put it up. This is as of February and March. What have they decided? The central banks. There are 7 of them. That's the G7. 1.4 trillion financial assets in March, nearly 5 times as much as the previous monthly recovery set in April of 2009 when the real estate bubble blew up. According to Bloomberg economy analyst, Morgan Stanley analyst, estimate that the Federal Reserve, Euro, Central Bank, Bank of Japan, Bank of England will expand their balance sheet by accumulating 6.8 trillion when all said is done. So remember, we're going to trade what we see. Maybe there is a slowdown, but I want you to understand this is from Bank of America in June. They put out an overall way. Most of the money is in the health sector, US, economy, technology, cash, derivatives, bonds, and staples. In the Eurozone, very little. Real estate investment trusts, very little. Japan, industrial, banks, material, equities, UK, and energy. So we are overweighted in the defensive stock, not in the regular accumulation. Remember, this is for education use once again. We are not a broker-dealer. Past performance does not indicate future result. For illustration use only. Use at your own risk. And this was put out by Bank of America last week. I hope this was helpful. Enjoy your weekend. I look forward to seeing you on Discord or on Twitter. Take care. Over.